Welcome to TradeTheNBI.com. This is John's report is for the 31st of March, and as we end the month, well, we made this huge trek all the way back up from, the early disaster. Of course, they'll talk about it being the invasion, but really just the realization the Fed was going to raise rates and the uncertainty of that. But now it looks like, in their view, the Fed is going to back off and become more accommodating. And that was pretty fast. So that was like the quickest quantitative tightening and then return to quantitative easing I think we've ever seen. Whether it's true or not, that's irrelevant. This is what the market is trading off of, and that is the truth of the time. And if that perception changes, or the economic outlook changes in their view, then we'll see a completely different result. As it is now, they're not projecting the economy turning negative or anything at this particular stage. So that's why we've seen this move right back to, 4,600 here. We're getting towards the highs, and the potential for that to increase as dollar destruction continues, because the market certainly isn't going to pay for inflation. They're going to inflate the market to accommodate the fact of that devaluation, which that's just the way they do things. The same thing happens when oil and that does the same similar moves. The market will react to it accordingly. And from an NQ standpoint, literally looks identical. Still too much separation between the white NBI and the red in order for there to be any kind of significant pullback at this particular stage. Still also seeing magenta well over 40 here. It's not going to change anything. So yes, we're still going to get some variation back and forth, but it's nothing significant at this particular stage. From a Eurozone standpoint, of course, reached that 50, fading back into it. The more there's talk of, peace arrangements or whatever with Ukraine and that, but the Eurozone is merely functioning via the support from the U.S. Fed. And any discussion outside of that is just folly, because really they have nothing, and that's okay. As long as they're people still believe in them and are still using as an alternative, certainly not going to flip to Bitcoin or anything like that for regular transactions yet. So as long as those remain outside the mainstream for transactional value, they can continue to get away with dollar, pound, euro, any of them. They'll all be just fine. It's just when there's that catalyst point where people stop trusting it, like if you're Russian or Canadian in some aspects, you realize, wow, they can just shut off my access to those kinds of things. So I better look for alternatives. And that poses future problems for the dollar and that going down the road, as we've discussed before. So it's maybe not the best long-term strategy, but from a short-term, doing just fine. Gold, still holding up here, just shy of the 2K number, and still in a weak mode there. And they're going to continue to try and repress gold. Gold has been in a repressed mode for quite some time. Given what we've seen from a devaluation standpoint, it should still be accelerating, but that's been a problematic issue, because as long as you deal in paper certificates, not the actual metal, far easier to control. It's sort of like what we talked about with Bitcoin, in that as soon as futures became available, the ability to just, freak out, skyrocket move was inhibited, because you all of a sudden then had a futures contract that people could short, and it changed the whole dynamic of it, and basically it has held it back from, a lot of people having their predictions of 500,000, 1 million. Certainly at the projected rate it was headed, it could have gotten a lot worse, but once the futures contracts came in, we could see where that was going to go. From an oil standpoint, of course, they announced that they're talking about releasing more from the Strategic Petroleum Reserve. So that's why oil's down. It's another foolish thing, because at a certain point, when you're going to empty your strategic reserve, but then what? It's going to last you for a little bit, so fine. It gives you an interim supply jump. Still, oil maintaining over 100 bucks a barrel is problematic. No way around it. TLT. So we're getting a little bit more of a driver towards people buying treasuries. So that's just an indication that some people are still uneasy about market conditions. But it's strange that you would buy an asset that you know is going to give you a negative yield. So that's the world we're living in these days. From a Bitcoin standpoint, sort of consolidating after the big jump up that filled back in to the positive extreme, right about there, and we're just sort of going sideways on that until the next catalyst, which would probably be any additional sanctions were moved to want to try and get around any kind of restrictions, whether or not enough people are collectively going to start moving that direction just to have some presence in it. Certainly creates an added demand. That's what we see at ETH. It's just beautiful with the readings. The flow up and down is quite nice and continues to do that, and then even strong in there is no after hour because it does literally trade 24/7 and does it quite well. So it's one of the ones I actually like it, at least for the futures market. You don't even have to be in the space as much as having access to it via that portal. From a 50K standpoint, well, kind of went sideways there, then it went down, popped back up. So we're getting a little bit more of what I would call a little bit more regular action, which is mean reversion. It pops and then it drops from an intraday. It's a mess. And then we started to capture a little bit more short activity. And finally it broke down and created a nice little short run, which was short-lived because we ended up with P2, higher DOC readings, and orange dip below, which was an interesting one because it happened with gold rising. And that was the difference between the almost identical situation that happened prior to it with the shakeout improving. And when made it to the 50% rejected, this one popping up right there with the orange over. We could have taken it from the original reading. It was back over here as well. So there's multiple opportunities, and that one rode it all the way back up to the highs. Well, to relative, was back just below what the overall highs for the day were, but nonetheless, taking things to the green, and that's just the expectation. They're just going to trade back and forth, so they're just shaking out little weak hands and going back and forth there. Of course, you got the rebalancing right before the end of the month, so we'll see how much strength is going into that. There's still plenty of free money out there to just keep applying to it, so I don't see any reason why we won't see more of the same going in there. I think that probably we're going to start getting a little bit bigger ranges than even these, which this still isn't bad. I mean, we're kind of 25, 30 point moves on these swings. So, and controlled. I mean, it's all very readable for us, so I don't think any of it really is frightening. I think it's just a good opportunity to be able to ride those waves. As always, though, trade well. I will continue to put charts up on the Skype chat, and you can expect indicators to be sent out later in the day. Trade well. We'll talk to you later.